Hey everyone. Today I'm diving into how geopolitical events are shaking up the markets. Let's break it down. Geopolitical shocks can come in many forms: wars, trade disputes, political instability, and even natural disasters. Each of these events can send ripples through the global economy, affecting everything from stock prices to commodity markets. But how exactly do these shocks manifest, and what can we expect moving forward? First up, London is making moves to position itself as a neutral financial hub. This is a strategic move, especially in a world where financial centres are often seen as extensions of their home country's political agendas. By branding itself as neutral, London aims to attract businesses looking for stability amidst global uncertainties. This neutrality could be particularly appealing in the wake of Brexit, which has already caused significant shifts in the financial landscape. Jose Vinals of Standard Chartered believes this neutrality could give it an edge against competitors like New York and Amsterdam. Interesting times ahead for the UK's financial landscape. The Brexit aftermath has already set the stage for significant changes, and this new strategy could be a game changer. Speaking of the UK, its private sector is seeing the fastest growth in 6 months, thanks to a strong services sector. But it's not all roses. The manufacturing sector is grappling with global uncertainties and potential US tariffs. The services sector, which includes everything from finance to hospitality, has been a bright spot. However, the manufacturing sector is facing headwinds due to supply chain disruptions and trade tensions. Now let's talk about the Gulf markets. They've been a mixed bag lately. The region is heavily dependent on oil, and fluctuations in oil prices can have a significant impact. Additionally, political tensions within the region add another layer of complexity. The recent OPEC Plus decisions and their implications on global oil supply are also worth noting. Saudi Arabia's index is up, but Qatar is seeing declines. Investors are understandably cautious with all the geopolitical tensions in the region. The ongoing blockade against Qatar by some of its neighbours has also contributed to market volatility. Experts suggest that regional cooperation could be key to stabilizing these markets. On a broader scale, geopolitical tensions are fragmenting global trade. For decades we've seen increasing integration, but now we're potentially looking at a shift towards regional trade flows. This could be a game changer for global commerce. Countries are re-evaluating their trade partnerships and supply chains, aiming for more regional self-sufficiency. Next, we can't ignore the top geopolitical risks impacting markets. These risks are not just limited to conflicts, but also include political instability and economic sanctions. Each of these factors can create a ripple effect, impacting global markets in unpredictable ways. Conflicts in Europe, especially the Russia-Ukraine war, and tensions in the Middle East are major concerns. These conflicts are disrupting supply chains and adding inflationary pressures. The Russia-Ukraine conflict, for instance, has led to significant disruptions in energy supplies, affecting not just Europe but the global market. Businesses are feeling the heat too. The uncertainty makes it difficult for companies to plan for the future, affecting everything from investment decisions to hiring plans. Companies are increasingly looking for ways to mitigate these risks, including diversifying their supply chains and seeking new markets. Rising costs and sudden policy shifts are causing operational headaches. Executives are ranking geopolitical instability as a top threat to global growth. No surprises there. The unpredictability of policy changes, especially in trade and tariffs, adds another layer of complexity for businesses. And let's talk about investor sentiment. Rising global tensions and trade disputes are making everyone uneasy. Markets are more volatile than ever, reflecting the uncertainty we're all feeling. Investors are increasingly looking for safe havens, such as gold and government bonds, to protect their portfolios. So what can investors do? It's crucial to keep an eye on geopolitical developments and adapt strategies accordingly. The era of trade disputes and protectionism is pressuring the global trading system. Stay informed and be ready to pivot. Diversification and flexibility are key strategies in these uncertain times. That's a wrap for today. As always, don't forget to like, share and subscribe for more updates. Stay tuned and keep navigating these uncertain times with us. Catch you in the next video. And remember, staying informed is your best defense against market volatility. See you soon.